You think Forex makes people rich because that's what social media wants you to believe, but the real numbers tell a completely different story. One market creates millions of full-time traders, the other quietly creates the world's richest investors. So, which one actually makes more money? Stay till the end, because the final answer is not what either side wants you to believe. Most people don't choose between Forex and stocks, they choose between excitement and patience. One promises fast money. The other promises slow wealth. And that's exactly why so many people end up choosing the wrong one. Open YouTube, you'll find videos of traders turning $100 into $1,000. Luxury cars. Profit screenshots. Lifestyles that seem impossible to ignore. It looks like Forex is printing money every single day. But here's the question almost nobody asks. If it's really that easy, why aren't millions of Forex traders becoming millionaires? And in about 30 seconds, I'm going to show you the one number the Forex industry hopes you never Google. Now compare that with the stock market. It looks boring. No flashing charts. No dramatic trades every 5 minutes. Just people quietly buying businesses and holding them for years. Not exactly exciting content. Yet somehow, most of the world's richest investors came from stocks, not Forex. So today, we're ignoring the hype. Forget the influencers. Forget the rented Lamborghinis. Forget the screenshots. We're going to do something much more dangerous. We're going to look at the math. Because money doesn't care about opinions. Money only follows numbers. And that number I promised you? Here it comes. It's more brutal than you think. Forex looks simple on the surface. Buy low, sell high, repeat. But underneath that simplicity is one of the hardest games in the entire financial world. Here's why. Forex relies heavily on leverage. It lets you control a huge amount of money using a very small deposit. Sounds powerful, right? It is. But leverage doesn't just multiply your profits. It multiplies your losses at the exact same speed. A small move against you can wipe out your entire account, not lose some of it, all of it. And that's the part influencers never show you. Not the account that blew up. Not the version of the story where the trade goes wrong. Because I lost everything in one bad trade doesn't get views. So the algorithm keeps showing you the wins, never the pattern behind the losses. But here's the twist almost nobody talks about. The stock market has the exact opposite problem. And that problem is secretly its biggest advantage. Stocks don't move 10% in 10 minutes. They don't need to, because the entire strategy runs on a different force, not speed. Time, when you own a stock, you own a small piece of an actual business. A business that sells products, serves customers, grows every year, reinvests profits, and compounds in value. That compounding is quiet, almost invisible day to day, but stretched across 10, 15, 20 years, it becomes one of the most powerful wealth machines ever created. This is exactly why most self-made billionaires built or held their fortunes through stocks and businesses, not currency trading. So if stocks are the smarter path, why do so many people still choose Forex anyway? The answer has nothing to do with math. It has to do with your brain. And this next part explains why almost everyone falls for it. Humans are wired for instant reward. Waiting 15 years to build wealth doesn't feel satisfying. But watching a trade move in your favor within minutes, that feels incredible. That feeling is dopamine. And dopamine doesn't care about your long-term bank account. It only cares about right now. Social media understood this before most traders did, so it built an entire ecosystem around that feeling. Fast wins, fast losses hidden, fast lifestyle promises. Stocks can't compete with that feeling. A stock chart doesn't feel like a video game. It feels like waiting, and waiting doesn't go viral. So which one actually wins? Not the hype version, the real one. Here's the answer. If your goal is fast, aggressive, short-term speculation, and you're willing to accept a very high chance of losing your capital, Forex can technically fit that goal. But if your goal is real, lasting wealth, the kind that grows quietly for decades, the math overwhelmingly favors long-term investing in stocks. Forex rewards speed, discipline, and precision under pressure. Stocks reward patience, consistency, and time. One is a sprint most people aren't trained for. The other is a marathon most people don't have the patience to finish. So the real question was never Forex or stocks. It was always, which version of yourself are you willing to become? If this changed how you look at money, you need to see what happens when we compare stocks to real estate next, because that comparison is even more shocking.